Recording this video after close trade Wednesday, 17th of April 2013. Well, not put anything up on the site for quite a while now. It's because we've been traveling. We got back from Hawaii to Sydney about Tuesday last week, and as you can imagine, after being away for 7 months, the personal admin kind of just overwhelmed us. So just been taking my time, and plus every time I come back, jet lag is just awful. Just feel really like a zombie for a week or so. Anyway, just so you know, the time zone for trading here is pretty horrible. The open of the US markets is about 11:30 p.m. Sydney time, and then the close is about 6:15 a.m. And so, if I'm kind of trading before the open and during the open, get to my bed about, I don't know, maybe 1 o'clock ideally. Getting up for 6 or so in order to get a video out is tough. But anyway, see how we go, see how the new regime kind of works out here. And I did have a video ready to go out on Monday, but my site was kind of all glitchy on Tuesday and couldn't log into it or upload anything to it, so that went by the wayside. But Monday was a really important day, so let's just talk to the charts here. My feeling was over the last few days, this is the real trend that we're in. All the risk on markets have been selling off for a while. Equities hasn't been playing ball though, and while we were traveling we had this kind of continuation of the rally in equities, and it just smacked of a blow-off kind of move because everything else was moving down except equities. So you had these kind of blow-off days, exhaustion buying type days, 3 in a row here, and then Monday, bang, set us off in this kind of direction. We've had big volumes kind of traded since then, so I think this is a really important day and a bit of a follow-up kind of today. I don't think this is down. The downside move is over. I'll show you why I think that. In terms of the trend, better X trend is flipped down, and again you can see this was the trailing stop. It's a volume-based trading stop, and we had these exhaustion days, and it just trailed the stop right up there until it got hit on that Monday, and bang, we had a little bit of a rally back up. Everybody made a big fuss yesterday about 100-point rally, blah blah blah. Well, the day before, a combination of the Friday and the Monday was about 250 points on the Dow down. So I don't know why they're making such a big fuss about this. All it was coming back under the lip, and I think we're heading back down. So we've tested the lows today. I think this is going to fail. I think we're going to keep on going down. The reason I think that is we're not oversold yet. We're not really oversold. To get a real proper oversold readings, we have bigger exhaustion selling on the downside than the upside. Markets tend to whimper out and kind of have no demand type days at the highs, but bottoms are almost always made with big exhaustion volume. They drive out the sellers, and so we're looking for that real kind of exhaustion selling signal in order to get the weak hands out and to get the rally back up. We've got a little bit of time to run on the oscillators. Trend oscillator is -31. Oversold is at least -100 down here. A few days ago, these cluster of sell signals were looking pretty bad. We were looking at quite big open position losses here, but now, the last couple of days, they're all back in the money here, which is good. And as I say, I don't think this level is going to hold. Look at the sine wave on daily sine. We've been in this uptrend since November, really nice. But each time we've come down to make a little bit of a cross. So whether it's sine wave, the fast and the slow lines kind of cross, that's a support on this time frame, which have put in a pullback and an uptrend signal. We've come close a couple of times, this time into this move, and this one here into this kind of dip, but we didn't cross either time. I think we're due for that cross, so we're heading down in terms of these things kind of coming into a cross kind of situation and put in that pullback level. So I think we're going to break through these lows that we put in. This is an important rally point here. If we break through that, kind of get exciting on the way down. But that's what I'm looking for, because the trend oscillators are not really oversold. That means we've got downside energy playing out here. We've got the daily cross support level, which would be a pullback and an uptrend to go off, and we've got a couple of days to run before that kind of sets in. And where's the money been running? Well, the money's been running into bonds. I've been talking about this story for a while. So this is just equities versus bonds. TradeStation has a difficult time putting multi-markets on different on the same chart because they're in different time zones and different exchanges. easiest way I find to do it is to put the ETF on instead. So the SPY being the equities kind of ETF, and the TLT being the bonds ETF, and then you can do some multi-market stuff. And this is just an oscillator that looks at the relative ratios of the two markets. And while the money was running out of bonds, it was running into equities. But then, in the last couple of months, the money started to run into bonds, and the equities market kind of topped out. As soon as we kind of broke through this kind of zero level here, and then came back to it here, all of a sudden, we're now below the zero line, which means the strength is in the bond market. And I think we've still got a little bit of time to run on the bond market before it kind of reaches a little bit of an overbought level. And you can see that. So here's the 30-year bond market here. So talked about this exhaustion selling with an amateur bar down here, kind of a little bit of unstable. I was surprised that the retrace was so large. Again, as I was talking about this with this video, once we set off into this uptrend mode, usually the lower that blue professional bar, this is kind of the buy zone. Usually that would hold. It didn't hold in this place, so that kind of freaked me out a little bit. But then we reasserted ourselves, broke above a resistance line again, getting this move going. And this, again, a little bit of overexcitedness back here. We come back into that buy zone with these blue professional bars, and we kind of reasserted back up. So we're in an uptrend here. We're above resistance on the daily chart. This has got to make pullback to end of trend and exhaustion buying on the upside. And you look at the levels that we reached last time down here, we've got to see that on the way up. So we're still, the money's flowing into bonds, I'd say out of equities. So this is going to continue high, I'd suggest. And then look at the other charts. Well, gold and silver, extraordinary moves. Now, okay, what happened with gold and silver? Basically, we broke through in a really important technical support level here at kind of the 1500 type level. We kind of bounced off there 3 or 4 times over the last year or so. And now with this move down through 1550, you can see we broke into another downtrend here, extreme levels on the way down. Now, this is getting the level of hysteria and hype in the media that we had similar to this move that marked the highs up into the 2000s and 50 on silver. If you remember, all of the dollar was getting destroyed. You need to get your money into gold, blah, 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 blah. So now the same kind of level of hysteria in the media and the kind of the financial press is coming into gold. And it's like for the first time, gold is on mainstream media. It's a topic of conversation there. I mean, previously it was just a little bit of the gold bugs talking about it maybe, and then a little bit of commentary in the financial media. But it's kind of mainstream media now. So watch out. Those are the type of that's the kind of signals where you get kind of changes in trend. We're getting all these blue professional bars kind of coming in. We're having these real extreme kind of selling levels going on and better momentum kind of down here. But this is not going to be over until we see an exhaustion selling signal on a weekly chart and then put in a pullback to end of trend. Now I checked my kind of weekly chart here for how we're doing this week. We're getting to that level of extreme selling with blue professional bars kind of coming in, so that pro signal exit and that exhaustion selling signal will be coming in. All that does though is mark a little bit of a left shoulder. Then we've got to put in some time. We've got to base a little bit. We've got to put in our pullback to end of trend sequence on the weekly chart before an uptrend kind of continues. But I'd suggest that these kind of levels, the volumes going through the media hysteria and so on. It's like been talking about this being in a downtrend for a long time. Every time we came back into these highs, these blue professional bars kind of selling it down and so on. But now all of a sudden I'm starting to change my tune. It's like this is the beginnings of a bottom being formed, but it's just the beginnings of a bottom being formed. So it's like this will take some time to do, but it's reaching that kind of level. Silver, same thing. What we did was we fell through this important kind of technical support level here, about 28 on silver. Bang, bang, bang. We'd hit it 3 or 4 times, and then as soon as we kind of cracked through it. But now again, these kind of blue professional bars kind of coming in, the exhaustion selling kind of coming in here. The weekly chart on this will be critical, so look at that for that left shoulder. That's not a buying opportunity. All that's doing is just saying the hysteria is kind of got the weak hands out, and we'll then be able to start to test the bottoms, put in a bottom base, do all of those things, which takes a long time to do, and then maybe start to consider an uptrend. But anyway, it's interesting times. Copper. Now, again, copper have been saying this has been a downtrend because we broke through support. We had, with the exhaustion patterns, bearish divergence, we test back up with flush patterns here, and then the last time into these highs, blue professional bars, and then bang, the professionals getting short on that move up, and then chasing it down, saying we got to get on board this move on the way down. Now, this thing isn't over until we see pullback to end of trend, exhaustion, selling, and so on. We're below support, so that means we're in a downtrend still on this time frame. And again, with all these, in terms of trends, I look for the weekly charts on these, the bigger picture in order to get the trend. But we could be starting to, with all these blue professional bars kind of coming in at these lows. Let's see where this goes. It's an important kind of support level kind of previously. So the professionals kind of picking it up down at these levels. And eventually we'll put in a bottom here. But again, it's you can see on this little blue professional bar, bang, they sold it down, bang. This is when we were traveling. We had these kind of counter trend rallies kind of going on, but that's all they were. That wasn't bullish activity. That was just a counter trend rally. And crude, same deal. Now crude's temporarily put in a support level with yesterday's activity, but again, going back, we topped out here. We topped out with blue professional bars up here. Exhaustion buying, Rambo patterns, always unstable. When you see that, the amateurs getting wrong-footed at 98, and then professionals selling it down, and then they sold it down again. So we'll see. We need to see exhaustion levels that are similar to these on the daily chart before these things are over, and we put that support in level there. So potentially we could be falling into a bigger move, a bigger downtrend type move. But again, just look back at where this is kind of historically. It's kind of getting long in the tooth, and it's kind of at an area where we've seen support previously, so it's not surprising that we're seeing kind of blue professional bars potentially kind of coming in over the next few days. But again, let's not call this too early. These are just continuation of these downtrends, and if equities kind of sell off and sell off hard, these things will kind of keep on going. All right, currencies. Again, so dollar index, the week that we were traveling, it felt like it was kind of a counter trend rally. The dollar index was kind of selling off here, but now with today's activity, yesterday's activity, you can see we've found support, pullback and an uptrend's gone off. Blue professional down bar, picking it up on that lows today, we reverse, kind of cracked back up through the highs of that. So on this down move here on dollar index, those professionals picking it up because we're in an uptrend and been, talking about this. So dollar index, we spent all of the end of last year basing here, broken into an uptrend, and then all we've done is just come back, pull back, and an uptrend's kind of going off. So suggests we're heading higher. So, and again, the money's flowing into the safety of US dollar and US bonds. And what's happening on the other side now? Interesting, Aussie dollar, which has been the strongest of the lot. We had some bad numbers out of China on the Monday, and the Aussie dollar got cracked here. That was that kind of big down bar. We'd had exhaustion buying into these highs at 105, bang, cracked down. And so, it's held up. It's done remarkably well, the Aussie dollar. I'm actually going to put up a link to Sovereign Man article on Australia and the Aussie dollar. But finally it's kind of come down. So this blue professional down bar, professionals kind of selling it down. I think this got a little bit of a ways to travel, but it has been the strongest of the lot, so I'm not saying this is going to collapse. That was just a reaction to the Chinese news. So let's see if we get some follow through here. Canadian dollar. Now, Canadian dollar, although it's been pretty strong relative to the other currencies, the yen and the pound and so on, it is kind of weak. Again, Canadian dollar is commodity-based currency. It's more tuned into what's happening in the US market. The Aussie is more tuned into what's happening in the Chinese market and the Asian markets. But again, anyway, it kind of followed it down, that kind of bad news on Monday out of China, and so it looks like we're kind of continuing on the way down. Got to see exhaustion selling on these things. So Canadian dollar's down. Pound, it was a really weak little rally, and then kind of rolling over here. So pullback to end of trend, got to put in here. And Japanese yen. Japanese yen, we put in with that extraordinary kind of final bout of news out of Japan. We put in this exhaustion move here, pull back to end of trend, and extreme levels down here. So on a daily chart, for the time being, I think we found a level. I mean, we've moved so far. It's just unbelievable how far we've moved. So it's got to get exhausted at some point and kind of base for a while and just figure out if it's going to continue down. I think in the long picture it is going to continue down, but for the time being with that activity, we have just found some level to just stay with for a while. Euro, and the Euro's finally, we've got this kind of pullback and a downtrend about to go off, so hopefully that will go off in the last couple of days. Euro, we've been in a downtrend. We just had this kind of rally, and then with this activity Tuesday, Wednesday, it just freaked everybody out up to 132. This isn't a downtrend, so it's like, come on, let's get this thing going. Pull back to end of trend we've got to put in here. Who knows whether it's kind of funds being repatriated to fix up balance sheets with the European banking system. That does tend to happen in crises. And don't forget, in 2008 that was the big surprise. When you had the subprime crisis in the US, everybody was expecting the US dollar to crash, and yet the US dollar strengthened, and strengthened really hard. It's like, why was that? That was because the money was being repatriated to fix up balance sheets. So loans were being called in, margin loans were being called in, the money was being called back, more collateral were put against positions and so on, and that caused a flood of money back into the US. So if Europe does kind of crash, just bear that in mind. We could actually get kind of strength in the euro because of that repatriation, and it has been pretty strong. So we'll see. There we go, dollar index. I think that's the last. Okay, 40,500 tip bar chart. Let's talk about that. Just last chart. So I was surprised that we rallied from here. This kind of rally move here. I thought we would go further than this. We did put in exhaustion, bullish divergence, and flush pattern to end this thing, and then we rallied from there. But for me, I thought this was exhaustion selling getting the move going. I thought we'd see another one kind of ending the move, but we didn't. And so they kind of forced it back up into these 1580s, 1590s kind of levels. And that's where we got exhaustion buying on the upside. We rolled over and we were in a downtrend as soon as we broke those levels here with Monday's activity. So that's pretty extreme down here. Pull back to end of trend we put in for the time being. But this is what I'm talking about, exhaustion on up moves and down moves. Up moves tend to whimper out. There is an exhaustion buying signal somewhere in the background, but then we can put in quite a lot of time just whimpering out in terms of the equities markets on the upside. But bottoms are always put in with real extreme selling. You'll never whimper out on the downside. You'll always have an exhaustion selling signal on the downside. So I'm looking for something that mirrors that kind of reading, this kind of, I don't know what that was, 80, 90,000 on better momentum here on the 40,500 chart. The kind of the level of extreme kind of buying that went into this move that rolled over. I think we've got to see that on the downside. We got close-ish to it, but that was just getting the move going. It wasn't a left shoulder. That wasn't really happening on a left shoulder in my head. So I think this 40 level will fail, and I think we'll continue into another move on the downside. And again, I'm basing that based on the trend oscillator's not oversold yet, and we've got better sine wave on the daily chart to make a cyclical support level. So looking for something like that pattern on the way down. So just that's what I'm looking for in the next few days. So I still think it's going to be weak going forward, even though we've put in this kind of pullback to end of trend. I think that 40 level is kind of critical, and we could easily just drop through it again. Anyway, quite a long video. Apologies for that, but there's not been much up on the site. Let's see, what is it? It's 8:30 a.m. here in Sydney, so let's see if I can get this video out to this site kind of in reasonable order. So hope your trading's going well, and again, thank you for the kind messages got over the last few days. I hope no one was impacted by what happened in Boston. Very bad news. We actually had a family member kind of there in the race. They were running, and so was their son in the junior day the day before. They got out kind of not without their kind of problems with flights being cancelled, all that kind of stuff, but dreadful news. So I hope no one associated with the Emini-Watch was impacted. Good luck with your trading.